Another tax may be brought to bear on the backs of Bahamians, as the Bahamas has signed on for a new corporate income tax. This much coming from Attorney General Ryan Pinder, who says that the new tax is a part of the country's pledge to the Organization for Economic Cooperation and Development and G20.
That's a very selective tax. We need to be clear. That's only tax on global groups who are making more than $750 million a year. And so that would only impact a small subset of companies in our economy.
Now, what is the percentage in which government is going to collect?
It's a minimum of 15% of net income. And so what that does is for the large multinational companies operating in the Bahamas that meet that threshold, the Bahamas would be able to capture 15% of their income that is generated in the Bahamas. So what that regime does is it makes the jurisdictions tax the revenue in their jurisdiction.
Meantime, we also spoke with Dr. Tanya McCartney, the CEO of the Bahamas Financial Services Board, who shared that the board has been in aggressive dialogue with policymakers over the implications of the new tax on our financial services. McCartney explains those implications.
Well, certainly for us, we believe that there may be some positives to the extent that the Bahamas has been labeled as a tax haven and all that connotes. And so to the extent that we have committed to implement this global minimum corporate tax, BEPS Pillar 1 and Pillar 2, we think that it's a good thing for financial services.
When will the new tax come into effect? Pinder shared this timeline.
Decisions have not been made. Those are going to be done with widespread public consultation. But I think it's comfortable to say that with respect to the subset of $750 million in revenues and above, we will be putting in a corporate income tax for those, and then we will have widespread consultation on the regime in general.
Laurencia Smith, Eyewitness News.